go ahead and get started. I'm excited about this topic because that's a question that's going to concern all folks that are operating a business or looking at starting, because we have hey, come on in. We have a number of people that are looking at starting new businesses that are part of our challenge, which is great. But today's topic is on real estate and insurance, and that's a big ticket item when you're working, when you're operating a business. And I'm delighted that we have two pros here that are going to be sharing all kinds of insights, and I hope you have tons of questions for them. Please try to stump them, especially Pat. So he's being able. But this is Pat Callebs with Callebs Realty. Pat, you've been in business for a long time in commercial real estate, and he's going to share some information. And then in regards to insurance, which is another big ticket item, is Jarrod with Nationwide Insurance. So what kind of the format is, I'm going to let these two talk about some insights that they're going to share with you, but the biggest thrust is throw them some questions. That's what it's about. This is your opportunity. And I will turn it over to Pat and Jarrod.
Thank you. What I've done is put a series of my thoughts together as they came to me and did some research, I guess like everybody else does, online. So there will be some things I say I may not give proper attribution to the real author of it, but I'll snatch those licenses wherever I can. But generally, I have been, well, I'm a little bit long in the tooth, as some of you may guess. Been around. I'm an engineer by training. Done some serious management projects in my life. Got my MBA at night school when I was in my late 40s, just to show my children that it could be done. My wife and I have a real estate company that's pushing 30 years in existence. I do the commercial, she does the residential. I work for her, and she allows me to say that most days. We have offices in Abingdon and Bristol, and we're clawing our way out of the recession or whatever that bomb is we went through over the last 7 years. So what I've done, as I said, is just put some of my thoughts out. Curiously, the first internet site that I found was Canadian. It listed big mistake in starting a small business. The number 3 big mistake is in the renting or finding a place to be. So again, if you have made the decision, or some people would say, if you've taken the decision to start a small business, you're a decision tree. Here's the engineer coming out of me, okay? So work with me a little bit. You've got the idea, got a light bulb, and you come to a forks in the road already. Are you going, as far as housing this venture, and conventional wisdom, if you listen to everything that I do and read more than I do, will tell you that going and setting up a storefront or a place in a mall or an office building site is kind of dumb, because you can do all that stuff online. And that's a serious question, that's a serious hurdle you should be ready to cross over before you go out getting a place just to be out of the house. Most small businesses, I would dare say, start out across the kitchen table or in a local bar or in the living room. Wouldn't it be nice if, the next thing you know, you've got somebody, you're selling something. So, but assuming that you have studied your situation to the point that you can't do it at home, you can't do it in cyber world, you have to have face-to-face contact people to sell them to your product, and that's about 95% of what happens when you go into business. You're selling something. Even if you're manufacturing, you're selling. So if you're into this branch of the tree which would take you to needing a site to do your business, if you'll look at the little handout I gave you, you'll see that the location, anybody that'll talk to you about real estate without mentioning location will lie to you about other things. It is king, especially if you are trying to sell something. It should be, your location that you decide upon should be friendly to, first of all, your customers. That's kind of what you're in this thing for. The people that are going to be bringing you stuff to sell and work for you. And where your competitors are or are not, that's just about as important to know. And the emphasize right now that you should try to look down the road a little bit. Is this business going to take off and explode? You're going to need double the space? Or is it going to be like a whole lot of other businesses that just roadkill on the road to progress? In other words, you'll be finding something else to sell in a while. That'll all weigh on your decision when you go to talk to the person or the group that owns the real estate that you're wanting to go rent some of, lease. And immediately I want to interject. Now this is for you or anybody comes to you for advice or your children, whatever this information is. So you sort of have to work with me. That I don't think I see a lot of people here that are going to rip out, except this young lady here. She's going to forge ahead doing something. That's the only person I know anything about. But just in case you are, it should be of some help to you. The square footage that you're going to need should be carefully thought out. That is, sounds like such a simple thing, but too much is really bad news when you have space that you're paying for, because it's ordinarily charged for you on a square foot basis, either or and by way of the actual base rent and the so-called CAM charges, primary maintenance, utilities, anything that we'll get into a little bit more on. And the site that you select, you should sort of start trying to build a circle around it and surround it and find as many places that kind of fit for you as you can. Just before you start getting too deep into it, you should have a circle of influence beyond which you won't be effective for all the reasons that you won't be. And one of the things that you should bear in mind, it's kind of small one, but it's large in another way, is if you go to a place that has, what's this place down the road with all the fishing rods and boats and everything?
Bass Pro.
That's the one. And you set up a business with live bait and travel associated with it or whatever, from a landlord. I'm using this as theoretical. And Bass Pro Shop decides that they don't like a store in Bristol anymore. Where does that leave you? That's the big draw that got you there. So you'd have to have some language in the lease. We'll talk a good bit more about the lease as we go. And I'm trusting Sandy to run the clock on me here, so I can't talk. The image that your business, your small business, you want to portray has to do with where you're located on a macro basis. In other words, the edge of the part of the town that you're in, or the part of the building you may be in, or the part of the complex you may be in. Because you certainly don't want to lose the draw of your surrounding neighbors, or to make a problem for them with whatever you do. In other words, as I said here, do you plan to be upscale, Tiffany stuff, or are you going down into kind of clothes I'm wearing here, or maybe just the next boxcar that comes in, we're going to take it down and sell it. All those things you have to kind of keep in mind when you cite your business. A business plan, I've heard that term thrown around a few times. And if I might say, that's kind of a specialty of mine. And that's a double-edged sword. Sometimes you eat too much of your own cooking, or everybody says, would you mind helping my cousin get this business plan? And I do, so. But you have to have a business plan, and one thing that came out just kind of as a theme in this is you should take a good look at yourself as a credit risk based on your experience, because when you go sign a lease, those people are going to make sure they get their money. You know, you don't stay in business long if you don't collect your rent or your bills. So where am I going with this? Take a good look and say, would I rent to me with this? Because you're still in that this creature I made a while ago of a startup business, which has a high mortality rate. First year or two, Sandy could tell you, probably 75–80%, even higher for things like restaurants. So you have to kind of put yourself in the other person's shoes a little bit as you go through this. Business plan, I'll give you a 30-second shot at my concept of a business plan. It is working from the back forward. You decide how much money you want to make, and then you start going back to how you get there, realistically. And you have to do it on a micromanaged basis. It has to be done to see the impact of too much square footage on too much inventory or not enough sales hill. All those things have to go into a realistic dollar. And of course, your cost of occupancy is probably snatching 20–25% of your overhead that you're going to be living with. And a small mistake on a large divisor can cause you a lot of headaches when you start making negative numbers on your output. So, the business plan in hand, you decided that yes, I'm a good guy or a good gal, I would rent to me, because if I don't pay, Grandpa will pay. He'll co-sign that lease for me. A lease is a very complex document. It has a lot of moving parts, but it goes down to 3 or 4 that are really a typical lease for like an industrial building, 33 separate categories of leasing. And so you've got your business located, and you've got your business plan that's been gone over with. Oh, by the way, these advisors I have here, you should talk to an attorney from the get-go to see, first of all, these guys and women see people like you and me every day. They see us with dreams in hand. I'll tell you a quick story. A good friend of mine sets up a jillion LLCs. And he will not set an LLC, a limited liability company, which is a hybrid of a corporation and a partnership. He will not send the paperwork off to Richmond unless both partners, at least there's usually just 2, but the 2 or 3 principals of members of the LLC have come down and sat down, maybe go home. Usually he'll send them home before he sends the paperwork in, to decide on what their operating agreement is going to look like. An operating agreement is who's going to do what, who's going to be paid what, who's going to be responsible for what, and all that sort of thing. And he told me more than 50% of the time, he never sees those people again. Because that's where the rubber meets the road. Who's going to do what? And because inevitably, even in families, there's maybe especially in families, someone is going to say, I'm doing all the work and he's taking all the time off and taking the money. And then what happens? Well, cracks start to form in the dike, right? Okay. The lease, again, your attorney can give you a lot of information on that, especially on the form of ownership that you decide to have, corporation, partnership, single proprietorship, LLC, sub S, chapter C, whatever, all those things are for experts to do and not people like you and me that just wander out into it. So the real estate professional finds his or her way into this, and their job, in my opinion, is to search for you a place within that circle you've drawn, or that rectangle, and verify it to be what it is, and negotiate on your behalf, and obtain whatever leverage you can. Leverage is basically an advantage in negotiation. So, generally, leases are written by the landlord in favor of whom? Landlord. So, you got to take that as kind of a given. It's their property. They're starting out with it. You can gain little chinks and little bits and pieces that makes it worthwhile to do some negotiating. Everything is negotiable. And you're not dealing with a residence in this thing. It's a whole new world, especially in the setting of the rental rate. The part that is different, most substantial, is the variation of the rent with events. The landlord is going to make sure that their utilities are paid, their taxes, insurance, maintenance, upkeep, shoveling parking lots. That's a big one that should, almost every lease should have unless it's in the Sahara Desert, should have a clause in it about who's going to clean the snow away, because it always gets to fall between the cracks when the big snow comes. But getting leverage in the negotiation of the lease, and at this point, you should all start basing numbers not so much on gross dollars, it should be on dollars per square foot of lease space. Just, you should get in that frame of mind thinking about that, because that is a little bit of, when you change one of the factor in a two-factor equation, it has a lot of impact on the other. You'll be introduced to a lot of new terms. The most notable is what's called a CAM charge, common area maintenance. And that means that you will have to negotiate it with the landlord a dollar figure that will have some raise factor in it, some incremental increase in it, built in it, and that will have to be a lot of attention given to it. At a point when you start engaging the landlord and the space is there and you like it, there's a good chance somebody else may like it before you can get everything together. So oftentimes it's not too popular, but it is something that you should bear in mind as a renter, is getting a letter of intent signed by the landlord to hold that property until things can be done. Of course, landlords are not too hot on that idea. A letter of intent is sort of like an option. And I learned pretty early in the commercial real estate world that it's not good business to give an option, but you should take all the options you can get from the owner of the property. It affects the value and the flexibility of the ownership of the property. But they do give, they do surrender. I have bold in there, usable versus rentable square feet, or square footage. That's basically the CAM element, the common area maintenance, that's taxes, insurance, yada, yada. And they will have to be addressed with the landlord to their satisfaction. There have to be it's just one of the things I can't talk to you too much about. You should just measure the space that's already been offered, make sure it's there. Because sometimes walls are built, you've got a couple hundred feet that nobody knows anything about. You should know who's going to pay for that, because there's old sayings. I have a lot of old sayings. That says if it's not in the lease, it's not. Now that sounds a little bit silly. If it's not in the lease, it's not. And the other thing is, if it isn't in writing and signed by the parties, it did not happen. So everything that's in the lease will have to be signed, including all the negotiating things right up to the last minute. So, one of the things that ties back to the earlier ownership style that I've mentioned, if you sign a lease personally and you're the president of XYZ and something goes south, you're personally obligated for it. You should be as president of XYZ. So, again, going back to the first one, the shrinkage or expansion of your business, you should have some language in that lease for both. If you can get it, you should certainly have it for renewal if you have success. But just having language for renewal when you sign the initial lease is not good enough. It has to have a dollar figure attributed to it. Because if you go in and make a good killing in the landlord's property without rights to renew, and renewal time comes, as often as not, they'll stick it to you for being successful, unless you tie it up going in. Remember, if it's not in the lease, it's not. And another one that my son came up with, I like it. We own a campground on South Holston. People come in all the time. How much does it cost? He says, the longer you stay, the less you pay. You know, bird in the hand. So if you, a landlord is, the little bit of leverage you've got is to sign a longer lease, which is more risk. But they're more prone to cut you some slack on the rent, particularly if you're creditworthy. So there are escalations, and that's on a kind of a high order. You don't ordinarily get them into the startup businesses, but the tenant improvements, that's one that bears a little bit of discussion. On tenant improvements, they are ordinarily given as a credit by the landlord. If I wanted to take this room, make 4 offices out of it, I would have to bring a contractor in, a licensed, bonded contractor, no Uncle Charlie and his full along trailer. I mean, we're talking somebody that can stand by their work, or then the state of Virginia will come after them if they don't do it. They will give a good faith estimate of what it takes to make this part tile, wallpaper, and then the landlord, you can negotiate with the landlord to find how much that tenant improvement, or so-called TI, will be. He'll give that money up front. Give him some form, as a concession to rent, write you a check to be paid back, or whatever. But it's important that the tenant improvements be addressed and nobody has any misunderstandings about it. On that same regard, after 2 years of wedded bliss in this space, you leave, and all of a sudden you got purple tiles here. I think you see where I'm going with that. They have to restore that. There has to be a provision made, or it should be at least addressed, to not have that happen, have it restored to the condition it was when you wandered in there with your pipe dream. So, full service lease, that's kind of I'm getting real ticky into it, but it's kind of like checking into a hotel room. You go in, you do laundry, clean the place up after you're gone, water, sewer. So most of the commercial leases are net in character, which basically means they are subject to other charges. The golden standard for a triple net lease, and you can't really find many people who tell you, no two people will tell you exactly what a triple net lease is, except it's kind of like a grow. It's opposite of a gross lease. Triple net means that the room, or the space that's taken, the square footage, is paid for by including taxes, insurance, utilities, maintenance, outside parking lots.
Pat,
So-
what's the standard? What's the majority of people do? A triple net or?
In this market, and with starting out with a couple, 3,000 square feet, it's probably a hybrid. If you go to a big place where the meters are already, sub-metering is a costly thing for, to go in and put into a building that doesn't have it. So as often as not, the landlord will be a person or two, and they will make their charges fit your budget. So I guess what I'm saying is the typical is a triple net lease, because that takes the risk away from the landlord. They're willing to share some of that risk with the tenant based on short duration of the lease, maybe get grosser their initial price, but it's a supply and demand thing as much as anything. So the local market has a $12, $13 a square foot for X kind of space, and it will tilt and bounce around that. So,
If you were starting a business, and what would be the ideal type of lease that you would want as the leasee, you, the business owner?
okay, as a new startup, I would want all my help from the landlord up front, because I'm gonna have a lot of problems hiring people, stocking shelves, furniture, and advertising and that sort of thing that's upfront loaded. Personally, I would look for them to be sort of a partner with me in this, and say, if you can work with me for $8 a square foot, and I make these numbers here off my business plan, I'll agree in advance when we renew in 2 years that we go $12.50 a square foot, and try to work that. Does that make sense? You got help later doesn't really help you. See, I'm on the IDA in this county, and people come. We bring people in to look our business prospects over to set up. Usually, an industrial setup, could be commercial. Nothing against that, offices, whatever. Yes, ma'am.
So when you quoted the 12 to 13 per square foot, is that for warehouse, retail, or office space? And could you break those three down?
Well, yeah, I can. The office is the easiest. It's usually sub-metered, usually has, or often has, maintenance people on hand, and cleanup, janitorial, repair dings. Office, there is Class A, Class B, and Class C office space. Class A, this would be very much like Class A office space, because it was built to be an office. It wasn't something, a garage that was turned into, chopped up. It has the latest in streaming and Cat 5, wireless, Wi-Fi, the whole enchilada. No, that's Class A. It has better than average carpet and fixtures. Class B is, I think you see where I'm going with this, it's somewhat less. It's maybe older in age, and has some functional obsolescence in stairwells and size of rooms and elbow and noise, that sort of thing. Still pretty good stuff. It's very functional. That's key to it. Class C is a pottery barn that became an office building. You got wires that they really couldn't hide any place. There's, I think you see. So out of Class A, B, and C on local determination, you're looking at probably, well, I'll just put some meat on it, maybe $15 a square foot for Class A office space. And that is triple net. So that could easily run up to $20, $21, $22 square feet by the time you put in the CAM charges. B, $8, $10 a square foot, triple net. Again, see, when you keep it triple net, you don't have to talk about all that other stuff. It all winds up that way anyway, so you really need to get into the triple net mode if you want to go negotiate a lease. In Class C office space, either $5, $6 a square foot, and $3 or $4 cab charge. And I think if you look in your own mind and some stuff you've been into in the last few days, you might see where maybe in the ballpark with my numbers. But again, they really don't mean much until you go back to your what? Business plan. See, occupancy it's a significant part of it. It's controllable on going inside, but not once you're in. It's a fixed cost. And fixed costs are frozen costs when things start going south in your business. You need to have things that vary with sales to take you through the hard times. So if you have a big lease that seemed like a bargain at the time, it'll kill you when things, you get a little dip in the road. The escalators, again, the longer you stay, the less you pay. That's maybe it's stretching it a little bit, but it's a leverage thing. We're looking for a little leverage because, again, you're playing the landlord's game, his rules, his papers, his lawyers. And the best you can get up front is to kind of make it fit your business plan. You can't move on. Don't get target fixated with that space, especially excess square footage, just to get to the next step forward of your business plan. That'll kill you. That has a real downside. There's other space out there you can do. Location is important, but it's not all important. It's not worth putting your life savings into a location. And again, you got to bear in mind failure. Who could have seen 10 years ago virtual offices? People don't even go to an office. And the generations coming on now, that's your landlords, you know, what they call those millennials. I mean, we're talking real time now. I see a lot of people like me. They've got some of their better years behind them here. So it can happen again. There's who knows what the evolution is. And you put your life savings, shove all your chips in the pot just to get a lease signed because you mistaken that property can't be. And once that landlord sees that side of you, all of a sudden it becomes easier to deal with. It's a poker game. That's your question.
Thank you.
Again, some of the nitty gritty of it, you should, the last right-hand corner, let's go to that one right there. If I leave you with no other, I'd like you to take this away, okay? Ownership. What does that mean? Well, another one of my truisms is, whether you lease or whether you buy, it costs you money to occupy. Everybody buys a building. Some people just buy it for the landlord. Now, I'm out of the older generation, sad to say, where it was not a stigma to rent. It was just ground into us that you better buy that place by our parents. The people in the community that probably put more influence on you than your parents did. But the ownership is something that can be established. Of something, of a building that is sitting there ready to be occupied. Or I'll give you a quick example if you bear with me. I think it's worth, this is something new, something nobody else can tell you, except the attorney about the LLCs. Okay, you got a building, and it's pretty much open. Let's just give it a 10,000 square feet. And you have, let's see, you got a doctor, a lawyer. What's that other one that goes with it? An Indian. And you're kind of active out there in that commercial real estate world. And you know that these guys really want about 3,500 square feet of space that they won't buy. You can't find anything. You also know that they really hate this rent wrap. Did I mention something about an LLC a while ago? You can take this space, generally speaking, check with your attorney, check with your accountant. Form an LLC. These people as members, one of which will, by law, has to be what's called a managing member, manager, which means that's where the paperwork comes through. The doctor goes here, the lawyer goes here, and the Indian chief goes here. And a sort of, and this is, don't go out and say, Callebs is up there saying there's a condominium. Sort of like a condominium, you can set it up so that each one of these people, and say this just happens to be $100,000 that they're wanting for that building. Seller doesn't care what happens to it, they just want a check, a big fat check after they pay their realtor. These guys can go in and afford their space without having it appear on their balance sheets and such. It can, there are certain ways that it can be structured so that it's just an outright expense. If the Indian chief decides to go away, these notes, the note by which this was purchased is now split two ways after this guy pays his way out with what? The operating agreement. Remember that? This is doable, folks. So that way, and I actually, personal experience in it, and was ready to pull one off until a very wise buyer came and bought this factory that I had listed down in Bristol. And I had 5 buildings, and I had 5 people. And it was going to take way up from 6 figures down to $300 or $400 a month for each one of them to get what they want. So, does this make sense to you? You can own, like I said earlier, whether it costs you, the property, if you have it in your business plan, and kind of keep your eyes open for leverage. What this guy wants, he may even carry part of the paper, who knows?
Can you talk a little bit about exit strategies as it relates to the lease? Like, there are different scenarios, like you might need to grow, but the landlord doesn't have the space that you need to grow, or you're closing your business, or you want to move over town, to another part of town. How does that work on a leases traditionally, and what is the ideal negotiated term?
A lot of questions there.
Yeah.
Question.
I have lots of questions.
I know. That's a good question. I've been a landlord in a building. I won't mention it. That was about 115% rented by that very thing. It was a good, high-grade, financially sound tenant. They got bought by a bigger tenant, and they had one too many stores in their market area. And so I negotiated a check. It was about, if I remember, about $72,000 remaining on their lease. And for a mere $63,000 or $64,000, they took a walk. And they didn't care what happened to that space after that. Guess what? Somebody wandered in wanting that space. Press hard, you're making 5 copies, and that 5th copy is yours. The landlord controls. You can negotiate your way out for more. It's best to do it up front. And if I had the amount of rent that I've been beat out of, I'd have my heels parked in the Bahamas with a Jose Cuervo or something. But because it's tough to get money from people for rent. It's tough. They're not gonna pay you. Now, you wanna take that story a little further? I own some rental houses. And that was a good idea at the time. But when you go to collect that rent, I got a phone call when I was coming up here today. And it's, they're 7 months into a year's lease, and they've always just pushed it back a day or two. If the tenant knew their rights, you could not get them out of your own property for 6 months and not get the rent while it's going on. If they just knew the rights. You have to really, the landlord tenant acts of various states, particularly Virginia, are very strongly tilted to the tenant. Probably because of a lot of abuses for all the reasons. But if you get good advice going in, they will make sure, those advisors will make sure that you've made a choice going in to have an option to expand, an option to get out in the event of some unforeseen future event. It may be 95% of the rent left on it, but you'll be in a warranty debt so quick to make your head swim. First rent cycle comes by 5 days late. And then it's penalties, interest, late fees, the whole bunch, a lot of that hit you. So, and the legal fees. See if I can wind this thing up and about on target here in a second. Okay.
Excuse me,
Yes, ma'am.
what's typically lease term length, the length of a lease in this area for commercial property?
Commercial, 3 years. If there is such a number, 5 years used to be considered a short-term lease, but now the uncertainty. But I don't know if I said this earlier, but there is a trend going, on in this area, and I think most of the similar markets in our country, in my opinion, and I've got some factual data, but don't go saying Pat said, but there's a trend, in my opinion, that has shifted from us being like a 75-25 rent versus owner versus rent. It's pushed this number down. I'd say you're down in the 60s someplace. Pick a number. Say 68, 65. Because there's really no good way of measuring it. I've done an exercise this for one of the county officials. And why, shall we say, why are all of a sudden more people renting? Supply and demand. It's a law that's as old as time. Now, there are sections of town in Abingdon, Washington County, Sullivan County, Bristol, where there are fields full of apartments growing as we're speaking. I don't know if you know that or not. You may not go out on the roads to see them. I don't have any scientific information, but just because the Abingdon paper we used to get, the Washington County News used to have the recordings. Remember that? The property transactions? I don't know why, but they don't have them. But just take my word for it, I'm maybe halfway right on this. The building permits issued right up across the street here, in my opinion, has gone down from like 100 a month to 100 a year. Now I'm talking about building permits for single-family houses, which is the core of owner occupancy. I think you'd agree with me on that. So Sullivan County is not much better. From the heyday to this day, there's a number that's very close to what I just told My wife says, from the residential side, Pat said, sometimes I feel like it's nothing but us realtors swapping listings. We left them for 6 months and they didn't get us an offer, honey. I know, let's try Callebs. So that's a sad testament, but it's a reality. And there's been, I think, probably a culture, there's been a shift from the way my group was raised, where it's not too bad living in an apartment. We're only be there 2 or 3 years. And on that same thread, if you look at the market, I don't believe the people abide by the same kind of numbers that we used to just in the last 5 or 6 years. The rule of thumb, whether you're going to rent or buy, just take the couple, we see them all the time. Dinks, you know what dinks are? Double income, no kids. Or people of means, that they make the decision that if they're not going to be doing what they're going to do, living where they're going to live for 5 years, they rent. Period. We get rental calls every day, all day. There are other people do it. I guess all the real estate companies do it one way or the other. And I was going to bring a young man that works for us. He's out working while I do this stuff. We have a rental department in our company and have 550 units under management. Wasn't too long ago, we effectively, more than effectively, it was against our rules to get involved in rental. How do we go from 0 to 550 in 5 years? Let's make it 2 years. Because we think we heard the market.
Well, I would comment on that. Lending has a lot to do with that too. Money's tighter. So people that could buy five years ago can't buy now.
That's true.
That's
It's
part of it.
complex. I oversimplified.
Right.
I'll give you that. Yes.
Even if they wanted to, they can't. So, and then in a lot of situations, you're right, it's better to rent for them than it is to buy.
And then you get into some other factors that's kind of related to that. If you're going to rent, guess what happens when the toilet overflows or the water line bursts?
Call a landlord.
Call a landlord. If you're going to own a house, you are that landlord. And it sounds like fun. I'm a good do-it-yourselfer. I'll just go down to Lowe's and get me a hammer and a saw and get my little tool bag and just learn these one at a time. Well, that doesn't last very long, I can assure you. And so the literature that I've been through says that you should be aware that marketing to renters with all the full starting, now the very smallest one I gave you is getting your money, getting your rent money. If you look at the number of regulators that get involved in your business and your life and your landlord, starting with mold, discrimination, there's at least 8 known breeds of discrimination you get caught up in and hardly even know it sometimes, just with the utterance of a word. There's lead-based paint for pre-1978 construction, which is interesting. Let's try something, let's go to 2014, 2015. How's this crappy now? Marijuana is legalized in almost the majority of the states, in the lower 22 or 3%, and they're growing every month by another state or two. Aside from the social, I kind of worry about what happens if you discriminate against someone and they become if you don't have a good reason other than economic reasons for not letting somebody be in your house, the house that you represent, you're in a lot of trouble. If you don't confine it strictly to what you see on their credit reports, their rental history, And even then, you're kind of in the, you know, was the information you got good? Are you doing it down the line every time with everybody you encountered want to rent one of your houses? I don't know. But just taking for, as a given, that the person that you're going to put in that house pays their rent on time. And what about the marijuana smell after they've been there cranking that stuff, whatever they do with it? And you got to rent to somebody else afterwards. Meth. The landlord is just out of business if somebody makes a meth lab. Actually, homeowners are. We had a case, and I won't go into a lot of details. The buyer was ready to close. And word got out that it had, and they went in and I guess you scrape something on a wall or some kind of test you know, $6,000. It's a hazardous waste site. Deal went down the toilet. So being a landlord or owner of rental properties has its bright side because, you know, you can, there's a supply-demand situation on rent. You can get that rent. But you better be prepared for the whole platoon when you start dealing with one squad. Any questions? Appreciate your attention, your questions, and showing up. And that's our story. It's not all bad, but when you sign your name to a lease, especially with, well, any lease, it's a contract, and breach of contract, this is not a good place to be. Thank you again.
Jarrod.
Yes. My name's Jarrod Farmer. See, I handed out a few cards and I had my presentation available as well. Try not to go, do I need to step over here?
It's fine.
Okay. As in-depth as maybe Pat, but insurance is a very important part of the business ownership. As Pat mentioned, the high mortality rate, this is one part of it that can make that even higher. A lot of you are probably familiar with maybe going online now and picking a policy and say, this works, you know, let's go with it. Trust me when I say this, as far as the business is concerned, find someone that's knowledgeable. Because that is, you know, that's your lifeline, that's what you're gonna be providing you income for as long as you want. Maybe it's 40 years like Pat, or maybe it's a couple years. I don't know what your plans are. But if you want to go through the handout, you know, there's a couple of things that I thought was important. And, you know, number one, you know, what is insurance and why do I need it? You know, can anybody, you know, give me an answer other than one I put on you?
There's always someone who likes to sue.
There you go. That's the big one. And as a business owner, you know, there's, right, I like to tell everyone, you know, when you're picking out limits, there's one thing that's a magic number. So you want to know what a magic number is? If you're going to get sued, you generally go to court, $1 million. You know, hey, I won't sue you for $1 million. They may not get $1 million, but yet they're going to try to get it. So, but basically, you know, what it is, you know, insurance is an agreement which a company or agency provides a guarantee of compensation for a specified loss in return for a payment of a premium. And it's needed simply because you as a policyholder or a business owner, you want to transfer the cost of a potential loss to someone else, you know, rather than paying it out of your pocket. You know, let's say you pick Nationwide and you know, somebody takes you to court, you know, obviously, hey, I want Nationwide to pay this for me. That's why, you know, you come, I try to tailor everything, it's going to suit. I don't know what kind of business, let's say that you're an accountant. Someone walks up the steps and falls on your rug. Something simple. How could really that be my fault? I didn't make you trip, you know, if you fell on this rug. If you're going to court for it, you know, hey, you're going to go $1 million. So that's why you need insurance, just one simple. It's a complex contract. There's, you know, like Pat was talking about the lease, there's a lot of moving parts in it. Believe me, there's a lot of moving parts in this. I'm gonna go to the next thing, probably the simplest insurance contract, other than maybe an automobile or a homeowner's, is what we call a BOP. And I'll refer to it as BOP. You know, you go on the internet, you Google, try to find some stuff, you type in BOP, and it'll tell you. That's basically a tailored policy for business owners, business owner policy. There's a lot of different ways you can tailor this thing to meet your needs. Leasing, person owning. You know, you could be a tenant, you can still generally put a BOP. What a BOP is, it's an insurance policy designed for small and medium-sized businesses. It generally bundles the general liability and property insurance into a single policy. BOPs are typically the most inexpensive way to do that, other than putting a package policy together, such as your commercial liability on one policy and your commercial property on another. It's just a good way to do that. You can tailor these policies, you know, other than your standard, for things such as business income. Let's say that water pipe burst, you know, last week in the freezing temperatures. You can't use your accounting office. Well, hey, people still want their taxes done right now. What am I to do? Well, the business owner policy, it generally has some parts in there that what we include business income, an extra expense. You know, so if you can't actually, you know, operate your tax prep service, your accounting firm or whatever, because of that water pipe burst, flooded the floor, ruined your computers, hey, you still got customers, you still got bills to pay and everything else. Your BOP, your business owner policy, it includes things that will cover for losses such as that. Again, I'm not going to go into a whole lot of detail because I don't want you leaving here and saying, oh my goodness, what did he just say? I didn't understand any of it. But to the next page, on the BOP policy, there's going to be a couple of different ways that you can pick coverages. You've got basic form, broad form, and special form. I won't go over the perils. Generally, as a business owner, I would encourage you, don't choose anything less than special form coverage. That's basically, everything's covered except what is specifically excluded on the policy. You know, an example of something that might be excluded on the policy would be, you know, coverage for mold. You know, we don't cover, you know, mold or certain situation like that. Definitely get a special form. That is the one thing that gets people in a lot of trouble. You know, they say, well, I want to, you know, try to save some money on this, so I'm going to pick basic. And yeah, I think I won't have anything other than, you know, fire, lightning, explosion, smoke, windstorm, right, hail, blah, blah, blah. And then the next thing you know, hey, guess what? Water pipe burst or the roof collapses because of the weight or snow. Well, hey, because you chose basic, you know, you don't have coverage for that. And then that goes back to my first part, you know, when I said, hey, the high mortality rate. You know, if you have a loss that's not covered or wasn't prepared for, it will get you in trouble. Next page, we talk about being a tenant or you can be an owner occupant. Both policies can be placed on the BOP, generally. When I say generally, for the most part, there's some exceptions that are not, but I won't get into that. Tenant occupied BOPs are usually less expensive since we're not insuring the building. You know, we go back to the landlord. Most of the time, you can work that out in the lease where, you know, the building coverage is under that. Now, there's certain circumstances to where the landlord say, hey, you know, you being the tenant, you have to provide coverage for the structure as well. Just work that out with your lease, your landlord, or whatever. Yes, ma'am?
How does this work if you are operating your business out of your home?
Very good question. Different, let me look, there's different ways. It really depends what classification of business that you're doing. Example, a beauty shop. You know, those, generally you used to see a lot of those back in the day. They're not as prevalent as they are now. Most insurance companies will write those and will provide coverage for the business activities. only that is going on there. You know, you have a little small accounting firm in your basement, you have people, customers coming on site, people coming to get their hair done. We can tailor policies for that as well, but where I guess you're gonna see the most problems with that is most homeowners, policies, or, you know, standard homeowner companies, they have specifically excluded that, and they're generally no coverage at all. So they might even cancel you if they find that out. You'll need to work with an attorney on that part as well, as saying, hey, you know, maybe you're operating your LLC, you know, which is your barbershop, beauty shop, whatever, that you're actually leasing space off of, you know, you as an individual who owns the property. It can be set up that way, but it is pretty complex and complicated depending on your business situation, and what you're actually doing in your home. Does that answer your question? And if it doesn't, I'll try to make it simple.
Would you recommend that?
Pardon?
I hear you say that coverage, there is coverage for business activities, but most homeowner policies might not cover you if you work at home. So then what would you recommend if you are running your business and out of your home, and let's say we're selling insurance? You know,
What would I-
clients are coming in, but we're not doing hair and stuff. We're not dealing with chemicals. What do you recommend?
I would recommend coming to see me first of all. You know, what we'll do is we could put it, you know, a general liability policy, a BOP policy, maybe a commercial package. You probably, since you're working out of your house, you're not gonna need the commercial property coverage other than your personal property, your business, you know, maybe your computers, your printers, and all that good stuff. We'll just put it in there, operating right out of your house. It doesn't really get that complicated until we actually figure out what you're doing. And I know that's very broad, but, you know, give you an example. Let's say that someone is manufacturing,
Cupcakes.
Cupcakes. Yeah, you have a bakery in your home. That generally is probably something that most standard companies is not going to be interested in because of the increased cooking exposure. You know, meaning that, hey, there's a higher probability of fire, smoke damage, all that good stuff. So you can get coverage, but we'll just go on what we call the excess or surplus market, which basically will be a broad coverage. Generally, when you go excess surplus, you're talking about a higher premium. Put it on that over top of your homeowner's policy, and go like that. You still look confused?
So your homeowner's covers obviously the home and the personal content, and you have an office set up in your home.
Mhm.
You're saying your homeowners is not going to cover the things like the BOP would, which is lost income.
That's correct.
And liability.
And liability, yeah.
And what about your furnishings and equipment in that home office? Was your home a liability, will your home insurance cover that?
And I got one more thing to add. I'm pretty sure that if your home, like if destruction to your home was caused because of operating the business there, your homeowners wouldn't cover any of that. They probably would cancel your policy anyway.
That's correct. Yeah, you always need to let the homeowners company, whether it be Nationwide, State Farm, Allstate, Farm Bureau, whoever, let them know, hey, I am operating a business. Do you need to endorse it? Most of the time they'll endorse your policy, say, hey, you know, we know that there's a business activity going on there. And again, that depends on what you're actually doing. Repeat your question for me again.
No, you answered it.
Okay.
Basically, I need to call my homeowner's insurance and let them know that I have a business from my home, and here's what it is, and find out what impact that is.
Correct.
Okay.
And as far as the personal property and stuff that associated with the business, I'm not familiar with State Farm, you know, Allstate, whoever, but to give you an example of my nationwide homeowner policy. Let's say that I'm operating my insurance agency out of my house. My homeowner coverage says that I have $1,000 for, quote, business property. So, you know, let's say I have a loss that lightning hits, you know, in the springtime we have a storm and lightning runs in and gets my, you know, computers, TVs, routers, and all this good stuff. Technically, you know, all the stuff that was applicable to my business, that is not covered under my personal property of my homeowners. I would have had to have a BOP policy or another policy covering that for that. Now, there's a sub-limit, like I said, $1,000, so as long as those items weren't over 1,000, I could still claim them under my homeowner policy in the claim. Does that make sense? Okay.
How does, we were hearing the reference of lead man insurance, is that what it was, lead man?
Key man?
Key man,
Key
that's
man.
what it is, insurance.
Key man insurance, that is on the life side and kind of financial, basically what that is, and then a really simple, you and I are partners in an insurance agency. You know, we're both 50%. I'm thinking since we're the partners, we're the majority owners, we're gonna be bringing in most of the income. You can use the key man as a buy-sale agreement. Let's say that, you know, I want out, or we can fund it like that. But as far as the key person is that I die in a, you know, accident, you want to be able to replace me, so you have a $500,000 key man policy on me. You know, when I die, you're the beneficiary, you get $500,000, you're gonna use that $500,000 to go get, you know, maybe hire Pat to come in and start selling insurance, to get a new partner, or to pay any expenses that we would have had related to this business that were my lost income because I'm not there
So
anymore.
it's just the life part of it.
Mhm. Any-
Is there anything that covers, like, if you're a professional and you own your own business and you're on jury duty for like a 6-week trial or something, is there any type of insurance that would pay you while you're doing your civil duty?
I am not aware of it. I have, I mean, there's other policies such as disability income. Let's say that you know, you're hurt at work outside of the workers' comp portion of it. You know, you're disabled, you know, you can do that, but I do not know of anything that provides for that.
I had somebody ask me that the other day and I hadn't heard of anything either, so I didn't know.
I've not.
I might pick up a little bit on that.
Yeah.
Same thing, I had that happen to me on jury duty, 6 weeks, triple homicide, federal trial, the whole business. And I don't know how much business I lost, but it was, when you're sitting in there in that jury room waiting for them to argue out whether they said thee or they for an hour, that's cha-ching, cha-ching. And the other part of it, what's the second, you mentioned another aspect of law enforcement. I was in an automobile accident, and got hit head on, and tore up on intensive care. And I was working a salary, a commission sales job, and lost 4 or 5 weeks' work, and still about half capacity when I got there. But when I went to sue the offender, I perished in the crash. His insurance company, they wouldn't pay because I couldn't prove any actual loss of wages. I didn't have any set slips, so much an hour. And so I've tasted both parts of that. And I had a reputable law firm that went after it.
Yeah. One thing I do want to talk on the, as far as the bond, basic, broad, special, all that, as it relates to the property portion and even the coverage for the buildings. There's 2 types of coverage. There's actual cash value, and then there's replacement cost. And here's another one that I urge you, it kind of goes along with the special form. Don't ever take the actual cash value. Don't ever let anyone sell you that. Because here's what happens. I think maybe the iPad, for example. When you bought that iPad new at $700, when it comes out of the box, you know, what's it worth, $500 then? The actual cash value, basically, the way that plays out is, if it's involved in a fire, well, hey, I want a new iPad. Well, hey, I'm sorry, you had actual cash value. When did you buy it? Well, I bought it a year ago. Okay, well, it's worth $200. Well, I can't get a new one for $200. It's $700. Well, sorry, you chose actual cash value. Replacement cost, if it's $700 now, $700 tomorrow. If it has a loss the next day, you know, 2 years from now, we're going to go get you a brand new iPad. So that is a lot of agents will nowadays, you know, they're trying to actually just get you in a policy, save you some money, cut corners, that put you actual cash value because it's quite a bit, you know, less expensive, but pay the extra premium. You don't want to pay that out of the depreciation out of your pocket. The next thing is workers' compensation. If there's one thing you take away from here, take this part. This one can get you in trouble in a hurry. The rule of thumb in Virginia is you have a business and you have 2 or more employees, it is required. And employee is broadly defined. It could be someone that's on there 2 hours, a week, part-time, temporary, seasonal, whatever, family member. If they're working for you, and you have more than 2 employees, it is required. If they're injured, they're gonna come to you for compensation. And it's got 2 parts of it. Well, it's actually got 3 parts, but, for their injuries, we're gonna take care of their medical bills. We're gonna take care of their wages, traveling back and forth to the doctor. You're gonna be responsible for that. And, also the time off work, anything related to that. So this is another part I would not skimp on, because if the Workers' Comp Commission in Richmond, they are very, very favorable towards the injured employee. If they're injured, they want them taken care of. I can't stress that enough, and here's I put down there in kind of asterisk, all state endorsements. The way workers' compensation is written, it's basically on a state-by-state basis. Virginia is different than Tennessee. West Virginia is different than Virginia and Tennessee both. We will include that in all state endorsement, and being where geographic, location is. Right here in the tip of Virginia, we can be in Tennessee in 5 minutes, North Carolina 15 minutes. You definitely want to get the policy endorsed for all states. What that means is, let's say that you send somebody to State Street for a business luncheon or something like that. They're actually involved in a car accident on the Tennessee side. They were technically working for you at that time. They were in Tennessee when the accident occurred. If you do not have the all states endorsement, they were injured in Tennessee. Guess who's liable for the injuries? You are, not the workers' comp company.
I have several questions. When you say all states endorsement, if you select that, that includes all states. You don't have to say, I want Kentucky, North Carolina, Tennessee.
There are a few states that aren't included. Wyoming, I think Ohio, can't quote them, but there are a few that are not. And that is because they're monopolistic, meaning that you can only purchase workers' comp coverage from the state themselves, or a specified company that's handling it for that. West Virginia used to be that way. I think they changed about 2 years ago, so they opened the market up. But for simplicity purposes, the all states is going to pretty much cover about most states.
Okay, and is a 1099 employee considered, I don't understand how they categorize an employee and not an employee.
Do you tell the employee of the 1099 worker where to be, when to be there, and what to do?
Well, you probably would.
They're an employee.
Okay, and what if you don't pay them, because you said family members, sometimes you have family members working for you, that you're not, do you have to pay them in order for them to be categorized?
You are not required to be a compensated employee, but if they are working on behalf of you and they are injured, the workers' comp coverage would still be applicable to them.
Okay, and you said 2 employees, so that's 2 employees plus the owner, or does the owner count as one? If the employee's doing, or if the owner's doing day-to-day,
The owner is counted.
so then if you were an owner, like you're an insurance person, you have one other person working for you?
That's correct. I have to have workers' comp by the state regulation. And I would caution you, if you just, yourself, as being let's say that you're a partnership, or not a partnership, excuse me, a corporation. Workers' comp are favorable towards us as, corporate officers. We can specifically exclude ourselves from coverage. So, yeah, it's not applicable to us. We're hurt on the job. I hurt myself walking out of here today. I'm excluded from my workers' comp policy. So, the agency can still run without me being there. probably not as efficiently, but it still can run, we're still getting renewals, we're getting policies sold, so I'm not per se covered. I only have one other employee. Technically, there is a little caveat where I could get out of the way to have coverage, and not, but I would caution you, get the workers' comp policy, because, you may have think you have the best employees in the world. They're never gonna file a workers' comp claim. Don't count on
Until
that.
they get
Yeah, that one,
And
And then,
I just want to say something. I'd researched about 1099, so you have to be careful with. Even if you're paying somebody on a 1099, you're not telling them where to be, what to do. If you provide them with any kind of equipment, just a laptop, if you loan them a laptop to do their job with, then they're considered an employee because you're providing them tools to work with. So you have to be careful there too.
correct.
One point on that. Real estate agents, almost by law, can't be employees. They have to be treated with a 1099. It's kind of code of the West. That's the way it's done. You get your full commission when you present a closed transaction, no withholdings. We don't tell them where they can be, what they can do. We don't supply them any transportation. We just give them the ordinary papers that we flow through. A little bit of secretarial support, precious little. In other words, they're their own company. And in order, that's just the kind of way our industry is. It's meant to be a 1099 world with us, independent contractors.
So that means that you're not paying workers' comp on your agents?
That's correct.
Okay.
They have to maintain their own automobile insurance, and they have to have us as an additional insured to protect us in the event they're hauling clients around and having an accident. That we are as an additional insured, it's as if we have that policy with Nationwide. That's a good question, a good source of information. But some industries and some walks of life,
You sure it's 2 employees, or once you go to the third one?
It's 2 or more, and I verified that with the state
Okay.
workers' comp commission. Yeah.
and it's not that big a deal.
No.
No, you're rated based on your exposure and your hazard associated with whatever you're doing on a normal day's work. I think it's kind of, I've heard people say, not me, that it's a ripoff, but I think it's kind of a pretty good deal.
it probably depends on what you do, I mean, how
Exactly.
hazardous the job is that you have them doing. Would
It-
probably get pricey, I would imagine.
It is, example, let's say if, an accounting risk, most of those are, going to be considered clerical. And basically, just an average rate out of the air, 16 to 18 cents for every $100 you pay them, the employee, that's what you're paying workers' comp insurance on. Now, let's say that you're a carpenter that's building these single-family dwellings that Pat, referred to earlier.
Roofer.
Yeah, roofer. A roofer's gonna be about, for every $100 you pay your roofing employee, you're gonna pay about $25 for workers' comp insurance. So that one gets really, really pricey.
And what
So-
if I drove a taxi? And there's, I have a couple cars, do I still need, would my insurance, my car insurance take care of that? Do I still need, would you?
That's the next slide.
Okay.
We're getting there.
See, I didn't move forward.
No,
Let the crowd
no.
sing.
Yeah, we're going.
All right, that's where I come in.
Okay.
I'm the taxi service.
Okay, no problem. Taxi, livery service, those are very, very complicated. I've been doing this 11 years now, and I've only written one taxi service. And I actually had to go to the excess or surplus market, what I was just talking about earlier. As business owners, I'll caution you again, I talked about the homeowners earlier. Personal auto policies are meant for personal exposures. You driving back and forth to the grocery store, back and forth to work. I'll go back and forth to the office. Now, if I am, an HVAC, guy that, I'm making stop at your house, and your house all today, delivering parts, doing whatever, making service calls, and I have an accident as a result of that, back out, hit someone on the road. And, they ask, well, hey, the adjuster investigator says, what happened? Well, I actually just finished working on John's HVAC unit, it was on my next call. Well, give me a little bit more detail. Basically, you told them, hey, I use this for my business. Well, I'm sorry, this was not a business policy. It's not priced that way. It's personal, auto policy. You should have had a commercial auto policy. So, taxi service. Let's jump to that really quick. You basically are going to have a fleet of cars. I'm assuming maybe 2, 3, 5. Maybe you're just going to have one. I don't know. You will put that on its own commercial auto policy. You have bodily injury, combined single limits. You'll see that term CSL quite a bit. On our personal auto policies, we generally have split limits. It's, for example, $500,000 per person, $1 million per accident. So if there's 2 people in the car, each one of them, or they may be, applicable to $500,000. The combined single limit liability is basically you use this $1 million any way that you need it. We're not going to, say you're only going to get 500, you're only going to get 200, you're only going to get, it's $1 million any way you need it. Delivery portion, there's some other things involved, such as medical expense. Let's say that someone is injured inside the vehicle as a result of an accident, that you're taking them from point A to point B. That's another moving part to the commercial auto policy that I would be very, 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 very careful on to put that sub-limit on there as well. A lot of times that you have a person or passenger in a vehicle that maybe they're injured, it's something minor. They just maybe need to go get an x-ray on their neck. So the commercial liability.
Cindy must be driving that day.
So in order to keep them, maybe out of a lawsuit or, litigation purposes, you can just use the MedPay, which is a sub-limit. Generally you say you'll see them at $1,000, $2,000, $5,000, $10,000. They're a lot less than the $1 million combined single limit. Hey, you file a claim, Jane Doe went to the hospital, she just had a little neck, x-ray, tweaked it, whatever. It's $580. The insurance company will allow her up to the $5,000 sub-limit. Let's say that's what it was for this example. Pretty much pay her, they'll write her off maybe at $1,000 for injuries or, any kind of suffering, and just go with it. The taxi service, like I said, that's probably something that I've only done one time in my life, but it is a very complex, and if you want to go a little bit further in detail, I know we're getting close on time. You can definitely call me, email me, and I can give you a ton of information on it.
Okay.
Is that all right?
Yes.
Okay. Yes, sir.
Does the standard BOP insurance you're referring to for businesses, does that protect the business owner against actions of the employees? Say you hire somebody who seems to be perfectly straight up, honorable person, they end up doing something or get accused of doing something illegal, and they try to sue the business. Does that sort of insurance, what kind of insurance is needed for that sort of?
Well, and that all depends on what they actually did as well. Let's say that.
Okay, I'll give you more specific.
Okay.
I'm running a tutoring agency, so I'm going to be hiring independent contractors to work primarily with children under 18 years old. No telling what might happen. What could protect the business from the actions, say they were to touch a child or something?
All right, you have what we call D&O, directors and officers. You have sexual harassment, employment practices, liability insurance. Those are all specialty form coverages that are not automatically included on the BOP. They would be special endorsements that you have to actually choose sublimits on. The sexual harassment one is really big in churches right now. We'll put $1 million limit on that, and generally it's an occurrence and then an aggregate. I just did one, I think it was back in November over in Lebanon. They chose $1 million per occurrence for the sexual harassment coverage, and then up to a $3 million aggregate, meaning that they could have 3 $1 million claims. So yes, that is coverage is available, but it is not automatically included with a quote BOP.
And what type of rates are on that sort of thing?
It
Say
all
you're doing
depends
$1
on
million.
how many employees you have, and how, I think, what is the actual gross sales, that you're actually performing, or payroll that you're actually paying your employees to do that.
When you have a startup, and you
Yeah,
don't know how many
well,
people you're gonna have.
you're gonna go back to your, business plan and say, this is what my plan is. And those are generally audited policies, meaning that you give us an estimation at the beginning of the year, and then, one calendar year to the date, you're gonna get a form, phone call, or maybe even a physical visit from someone and say, hey, I wanna look at your books, we wanna see exactly how much that you have done. And,
There may be, excuse me.
yeah, no, yeah, go right ahead.
There may be some significant savings on your premium if you have policies in place and proof of training,
Yep.
proof of screening, proof of immediate actions that you can have. That goes you in great stead when you have a risk of unknown magnitude or source.
So like have employees sign what would you call it, code of conduct? This is how you behave, or here's how.
What we're
you
doing here,
behave.
this is a perfect example.
Yep.
If you have this kind of meeting with your employees and your staff, where you're saying, beware of this, when this happens, you need to let this person know and document and all that sort of thing, and have records, and then also have a written policy stating what the officers will do, what's expected of employees, how they're trained, and it's just good business to have those, but it's especially good business in risk management.
Exactly. And a lot of companies now, they're wanting that documentation. Before they're gonna put their name on the line for a potential $1 million loss, they're gonna know, hey, have you done background checks on these gentlemen? Ladies, whoever. We want that, we want your code of conduct, is it an open door policy? Is there always, there's two people supposed to be with, one child, while this tutoring session's going on. So those are things that they will want to know up front, to basically say, yeah, we're gonna take this risk, or we're not gonna take this
Closed
risk.
circuit cameras.
Exactly.
I have a question.
Yes.
So can you speak to a little bit to errors and omissions insurance, what that's for and who needs that?
Okay.
And why?
I can talk about it on, let's just use me for an example, or maybe even, I'm assuming Pat probably has insurance as well. Me on the insurance world, that, what was your name?
Celeste.
Celeste, and what business were you running?
At Supply Center.
Okay, all right, I'm gonna use us as an example right here. I'm the agent, and I'm required to have E&O insurance, errors and omission. And you, for an example, you call me or you send me an email that says, Jarrod, I need you to add a new van to my policy today. I'm going to be using it to deliver parts. I'll send you an email back, all right, Celeste, no problem, got taken care of. You think it's handled, no ifs, ands, or buts. And let's say that 2 months from now, you're making a delivery, have a little, back into someone, and you call me and say, hey, Jarrod, I actually had an accident, and I need to get this vehicle fixed. Well, I said, well, which one was it? What was that van I sent you an email on? Oh, I go look at the policy, I forgot to add that on there, even though actually I told you, yep, it's taken care of. That was an error on my part. It was a mission that I should have actually called and done that, but I didn't get it done. You as a customer did everything right. It was me who made the mistake. I have to file a claim on my E&O insurance and give them the details surrounding that, and we'll go back and we'll take care of that for you now, under my policy.
So as, let's say, Supply Center, if I had received an order from a client who was going to start a construction site and they wanted delivery on the 15th of this month, and I forgot to deliver,
Yep,
would that be the kind of thing that it covers as well?
it would,
Okay.
yep,
So it's mistakes that we make.
that's correct, yep. Go ahead.
Do you recommend that a lot of companies do that?
Yes and no. In my business, where there's so many transactions going on, you can't go without it, because I get probably close to 100 emails a day. 50 of them are policy changes. There might be one that slips through. I don't know that I've made one yet, but it does happen.
And yours could be a domino effect, right? Because if you forgot that van and somebody got killed in that accident
Correct.
or something like that, then you could be on the hook for
I-
$1 million.
I'm on the hook from start to finish, whether it be, the property damage portion and also the bodily injury.
I guess it would depend on what your exposure is in the event of an error, in the event you did make a mistake. Would that be part of the process of deciding if you need it?
I suppose.
More rear looking, isn't it?
Yeah, it is.
What you've
the
done in the past year.
Yeah, and the E&O portion of it is, it's actual quote mistakes. I forgot to do it. Anything that you knowingly did, well, hey, I'm just not gonna add this on there today because I want to save her some premium. And hopefully she will.
No, yeah, these are legitimate.
Yeah, and that would be excluded. I would not have any coverage on my E&O for that portion.
So it doesn't sound like it would be something that you would need if you were doing retail, but maybe consulting work, not a large number of transactions, whether people are depending upon what you do.
Correct. And an example on a delivery firm that they carry E&O insurance, florists, for an example. Most all my florists that I have insured, for wrong misdelivery of, they send, someone a condolence package and actually it was a birthday. Well, someone might take offense to that, and we've seen crazier things happen that, they go into a lawsuit because maybe they just actually did, have a loss a month or so earlier. And then they're going to take you for, a lawsuit and say, hey, you stemmed up my sobbing again.
Thank you.
So you have a very small level contractor where they can't have a separate personal vehicle and business vehicle.
Mm-hmm.
Very small, like say a real estate agent. They're not gonna be dealing with power tools or anything, they're just driving to, from, as a part of their livelihood.
Uh-huh.
Should that person, the contractor, have something on their policy for business use? Is that required? Say they're driving to a house they're gonna show, they have an accident. Well, they're kinda on the way to work.
Mm-hmm.
So how does the insurance company look at that?
I'm going to, my first commercial insurance class, which was 11 years ago, I had, the instructor said, welcome to the wide world of gray. That's a gray area, and how I'm going to suggest that, like Nationwide, for example, we can endorse a personal policy for business use as well. And it's for situations like me, my, insurance agency, I'm out going, looking at homes, taking pictures, real estate agents, I can do them like that. There's a little bit of increased premium for those situations, going and looking at homes, taking pictures, stuff like that. Now, on the contractor's part, I would pretty much say you would probably just need to check with your carrier, whoever that, maybe it's Nationwide, maybe it's whoever. And they possibly could endorse that, and they could give you the realms of, what's allowed and what's not allowed. Better safe than sorry. If you're doing any kind of commercial activity, on the contracting side, I would say get a business auto policy.
Thank you.
Yep. Anything else? There's actually two things, and then I'll finish up. I know we're running a little bit over. On the business auto, even if you do not have any auto exposures, if you've got any employees or think that you might ever go out of town on a business trip and need a vehicle, here's two endorsements that, like I said, it doesn't matter if you have a business auto or not, you can endorse the BOP policy to cover these items. And that's hired auto and non-owned auto. Hired auto, that protects your business from liability claims from third party injured as a result of an accident involving a vehicle you or your business does not own. I'm going to Nashville next weekend for a conference. I might fly down, I'm not sure. I'm going to rent a vehicle. I'm out and about, I'm going to Tootsie's that night for dinner. Backing out, pulling into the lane of traffic, I actually have an accident. I did not own that vehicle and I was on a business trip. I still want to take care of whoever that I hit, all the property damage and also the rental car. This hired auto will take care of that. Now, as far, when I said I want to take care of the rental car, that is an extra endorsement, that's called hired auto physical damage. That provides coverage for the vehicle that I'm actually in. Hired auto is only the liability portion, so what I'm actually liable to pay for my damages. To the car itself, you have to have the hired auto physical damage on there. Next one is the non-owned auto, probably what you all would see most. As an employer, I send my ladies to the post office all the time, to the bank. You know, hey, go make these deposits for me. If someone pulls out on Main Street in front of someone, hits them, the adjuster's gonna say, what was going on? They were in their personal auto, you know, for my, you know, I told them to, hey, you use your vehicle, go on. Well, I was going to the post office for my employer. Her, or he or she, their personal policy is probably gonna come back and say, hey, listen, we're not gonna cover that because you were using it in a business sense. No problem. File it on me. I can do the non-owned auto, and that's gonna take care of that.
So now, when you get insurance at Enterprise, when you rent that car or lease it, you need this in addition to if I'm renting that car and they say, do you want to get insurance on that? Because I have the episode of Seinfeld on my mind as you were talking.
The policy that Enterprise sells you is generally only for the state minimum liability limits, which in Virginia is $25,000 per person, $50,000 per accident. That's all that they're requiring that, you know, that you have to drive a vehicle on the roads in Virginia.
Yeah, but that's liability, but what about the personal part, does personal, or the physical damage?
The physical damage portion,
I was gonna say, but theirs usually covers physical damage, though, right? So if you had the top one and you bought that $20 a day, whatever insurance it is, then that would cover physical damage to the car. That's, at least that's how they sell it, so.
it's both of them. It's a package, generally. The physical damage, if you're just basically going out of town on a trip, you know, like vacation, family-wise, and you have a personal auto policy, I know this is a little bit off of course, but if you have a personal auto policy, you're just going out of town and that you know that you have comprehensive and collision coverage, don't waste your money on what Enterprise is trying to sell you. Because your personal policy covers that for anything. Now, as far as the business end is covered, if you rent that vehicle in your business name, I would then call the agent and say, hey, I want my policy endorsed for hired auto physical damage, because I think Enterprise specifically excludes physical damage for a business use as well, if they know that.
Really?
Yeah. It's Enterprise they don't like people like me, you know, because I'm telling you, hey, you don't need it, which if you've got a personal policy, you can endorse your hired non-owned auto, which is generally maybe $25 a year. You can put that on there, and they're charging $25 a day.
Yeah.
So, that's, and I know that was quick and we were scattered, and commercial insurance is a very, very complicated thing. Do not, if you take one thing away from what I told you, sure, I don't like for you to buy your auto insurance from Geico and Progressive online. Go ahead and do it if you feel compelled. Take my advice, do not buy commercial insurance online, because it is so complex and complicated. You know, are you gonna know what ACV is or what all these acronyms? Yeah, I think I need that. Let me click it. Go to someone that's knowledgeable and actually knows and can tailor something for you.
Thank you.
You're welcome.
Thank you.
Thanks, Jack.
I don't know about you, but I learned quite a few things today.
So did I.
Appreciate Pat and Jarrod for speaking with us today. Next Wednesday is on customer service, and I don't care what kind of business organization that you're doing, customer service has got to be one of the top things you look at. And we're lucky we're going to have folks from Food City. KVAT is actually going to lead that session, so next week, come and join us. So thanks again, and spring is on the way. Oh, and if you haven't completed, you didn't sign in, please do that, and also the evaluations.
And one thing, I'll say, my email, phone number is on that card. I don't